We are going to be breaking down another topic for you, all about whether or not you should deploy your money through private lending or whether you should consider investing in a mortgage investment corporation, aka a MIC.
We have a steady flow of mortgages that we are deploying capital on. So when an investor invests in the fund, they don't need to kind of re-up with us each year or check in. It's their redemptions based on when they need the money back out. So private lending, it's usually the term of the mortgage, 1 year. Then you have to find that next mortgage. That might take some time, and you're not earning interest.
What is going on, YouTube? It's Rebecca Lynn Matheson, aka the Canadian Cottage Girl, and I am joined here by Chris from Nest Capital, and we are going to be breaking down another topic for you, all about whether or not you should deploy your money through private lending or whether you should consider investing in a mortgage investment corporation, aka a MIC. So, Chris, welcome to the channel today.
Thanks, Rebecca, for having me again.
Absolutely. Well, let's break it down. Now, I know that you've been on the channel a few times here, and you actually had a video already breaking down what a MIC is. So for those of you who want a deep dive into what a MIC is and what you can do with a MIC even, we actually have a full video for you guys to check out. It is Mortgage Investment Corporation Explained, and we'll make sure that we link it in the video somewhere on your screen. And Chris, if you want to maybe just go high level on what a MIC is, and then we can dive deep into the differences between private lending and MIC investing.
Sure, absolutely. Thanks, Rebecca. In private lending, what that really means is it's investing your individual money on individual mortgages. So you're a direct lender to the borrower. Maybe you're introduced through a mortgage broker or agent. You're reviewing the mortgage application, credit bureau appraisal based on your own kind of lending parameters and investing your own money or lending out your own money on one property. Sometimes it might be you and one or two other individuals. We call that co-lending, sometimes called syndicated mortgages. But that overall private lending investing is a little bit different than what people are doing investing in Nest Capital. And Nest Capital, it's a mortgage investment corporation. So individual investors are purchasing shares, and that money is spread across all the several mortgages that we have in the fund. So you're purchasing shares, and again, it's spread across the entire pool of mortgages. And there are some interesting comparisons of each that we'll cover as well.
Got it. Okay. Yeah, I would love to hear a little bit more about this. So by what you've just described, it sounds like you're almost mitigating some risk by diversifying where that money goes to, because it's kind of spread out across multiple different properties. Is that kind of what you would say?
That is a good way of describing it. It's diversified, spread across the pool of mortgages, and the handling of the fund is done by the managers of the MIC, so myself and Roger. So there are some comparisons versus investing directly in one particular mortgage. Each has its own kind of risk profile, but again, like you mentioned, it is spread across the pool that way.
Awesome. Well, let's break down the two various options here. So definitely for the listeners, there's multiple different ways that you can invest. A lot of what we talk about here on the channel, we're talking about investing directly into a property, maybe going in and fixing, flipping, burring, that type of thing. This is another way that you can deploy your capital. So private lending and getting a return on it, or even handing that money off in a MIC, basically mortgage investment company, where you're having somebody else that really understands those investments take care of your money and still get those returns. And as you said in previous videos, I believe your number was about 10% return on the capital year over year, which is fantastic.
That's correct. Yeah, since we started in 2017, we've provided investors with a 10% annual return. That return, it's paid out monthly, so they can experience some monthly cash flow that way. So consistent return since 2017, and targeted for this year as well.
Awesome. Well, let's break them down.
Absolutely. So I'm going to pull up a overview here. So again, private lending is investing your funds in one particular mortgage. Really, the capital requirements are based on matching it with the mortgage loan need. So, maybe you'll find, through your mortgage broker or agent, the need for a small second mortgage for $50,000. As everyone kind of knows, that mortgages on first mortgages tend to be higher. So it's a kind of a tough game of finding how you can deploy the exact number on one or multiple mortgages. So that's one of the key things on private lending. There is a bit of a learning curve if you're private lending. There's a number of kind of documents that you would have to review and get familiar on evaluating. So usually when you're lending your money on an individual mortgage, you're going to be reviewing the applicant themselves. So, the mortgage application, things like their income, their debts, how long they've lived at the home, things like that will be in their occupation as well, will be gathered on that document. That document is provided typically by a mortgage broker or agent. You also need to understand, how do you interpret a credit report? How do you analyze that from Equifax or TransUnion, I should say. And then lastly, the appraisal. So every deal that we do has a accredited appraiser going in and reviewing that. So it's all that review, working with a real estate lawyer that understands private lending, because not all kind of cater to that, is why private lending for new people that are beginners on that might be a little bit difficult. The earnings is another key area that we should touch on. So typical mortgages in private lending usually are about 12 months, a year term. So think about it. You've invested your money on one mortgage, say $100,000. After the 12 months, maybe the person doesn't want to renew, maybe they've refinanced or they've sold their property. What do you do at that point? And that's what we mean by idle funds. You really kind of have to match up when you receive those funds back when that mortgage pays out to that next mortgage. And that may take a couple weeks, sometimes months. So the importance of having strong broker contacts that send you private type mortgages on a regular basis is very important. Another area of private lending that sometimes gets a little bit difficult is what happens if the borrower doesn't pay. Do you have a system in place to handle with collections? Do you have a bounce report from your bank that shows you that the payment hasn't gone through? How do you deal with that? How do you escalate it if it becomes a second or multiple occurrence? So again, that's some of the difficulties with private lending for those that are beginning to invest in mortgages that way. And then lastly, as I touched on earlier, you may not have enough private mortgage to invest in. You may not have the broker contacts that allow you to take it from when a mortgage is paid out and redeploying it in the next mortgage. So that's a kind of quick overview of private lending. Again, investing your money in one particular mortgage.
Got it. Absolutely. Thanks for breaking that down. So it really is dependent on that one person following in suit and actually paying you on time and you not having to go into something like collections. And you're really counting on one person or company or corporation to pay you on that one property. So that's really, I guess, the major difference that I'm seeing here between the two is you're getting to really spread the capital across multiple properties with this MIC. So private lending, you're only going to be hitting up one lender, one single mortgage, one single house. And there, as you said, are multiple considerations. So you're going to have to determine a strategy and a plan for if that person doesn't pay you, what happens to actually break that down, and how you can continue building more and more properties and expand yourself, because it seems more independent in nature with private lending. So let's break down a little bit more about this, Mick, because I know this is your bread and butter, running Nest Capital, and this is definitely something that I'd love to learn a little bit more about, and I'm sure a lot of people out there are quite curious.
Absolutely. And so what a mortgage investment corporation is, and Nest Capital is an example of a MIC, is whereby investors invest their funds in a pool of mortgages. So you're purchasing shares in a fund. So that's a little bit different than investing in one particular mortgage. Comparing that to private lending, the minimum investment that we accept is 1,000. And the reason we chose that is we want to make it accessible for all different investor types. Maybe it's a young professional that's wanting to build their nest egg to eventually put that strong down payment on their first property. So that's where you can kind of come in at a lower end. And our average investment is kind of closer to 100,000. So some people, retirement funds, but again, making it accessible, that low capital requirement is typically different than when you're private lending. You need to match the money to what the need is, which you may be low end 50,000, but more up to like 250 per mortgage.
Right.
Another thing that's different investing in the fund, such as Nest Capital, is we have a steady flow of mortgages that we are deploying capital on. So when an investor invests in the fund, they don't need to kind of re-up with us each year or check in. It's their redemptions based on when they need the money back out. So private lending, it's usually the term of the mortgage, 1 year. Then you have to find that next mortgage. That might take some time, and you're not earning interest, but you're consistently earning interest when you're investing in the fund, because that's one of our key main things that we manage quite regularly. So you're continuing to earn return. There's no funds that are collecting dust, or no idle return. The other key thing that you mentioned earlier that is different investing in a MIC such as Nest Capital is that we handle that collection burden. We have through the real estate lawyers that we work with, the legal knowledge to handle the scenarios when a borrower doesn't pay. So we've gone through that. We have a very stringent way of dealing with that, or have a procedure in place. So that's very key. And then lastly, we work with an extensive network of brokers, mortgage brokers, that send us mortgage deals on a regular basis. So that's why we can always, have funds, deployed when mortgages are paying out. We have the next mortgage kind of already in place. So that differs than maybe a private lender that might have just a relationship with, one or a handful of mortgage agents sending them deals to review.
Absolutely. Yeah, I think that networking effect is really important. So I guess that brings me to my next question, which is, when somebody's looking to invest in a MIC, how does one actually go about choosing the right MIC? Because just like private lenders, just like investors, RSPs, there's so many options for investing. So when looking at a MIC, what are the things that you're looking at? Is it looking at the people who own the MIC? They're going to be taking care of all of this stuff for you and finding someone that like, and trust? Is it their track record? Like, what are the types of things that as an investor you should be looking at when actually selecting the MIC to put your money into?
That's a very good point. And then doing your research helps out. Doing your due diligence of the MIC is important. There are many MICs out there, each kind of with their own different flavor. So some of the areas that you touched on are important. Looking at the track record, the historical return of the fund, also getting a sense of their lending parameters. Do they focus on first mortgages or second mortgages? Do they do a bit of commercial? Do they just do a certain geographic area? That's another good point. The experience of the managers is important as well. And asking those questions of, what happens in a scenario such as this. So having those initial conversations with MIC managers on your investment, I think, is important. But obviously looking at their track record, who they are, their lending parameters, and what they focus on is helpful to compare. And we're more than happy to hear from investors if they interested investors if they have any particular questions on each.
Got it. Now, I've heard of this like term financial advisor, right? And that seems to be quite popular now with various different, you can go to a financial advisor and they're going to give you various investment options, whether it be at the bank or outside of that. So would a MIC kind of be just one of those other streams essentially that a financial advisor would advise you on? Or would this typically fall completely separate? Like, do people most of the time just source out MICs themselves to invest in, or how does one even stumble upon a MIC aside from our YouTube channel, of course, and getting exposed to Nest Capital? But how does one normally even find out about MICs or get exposed to some of this information?
Sure, absolutely. And typically what we see are investors that are doing kind of more of a self-directed approach to their overall investment portfolio. Some sentiments that we hear is that they're tired of the stock market, that there's swings. Sometimes it kind of defies logic. They're looking for something a little bit more steady and consistent. And that's kind of what has guided them towards real estate over maybe investing in a real investment property, or maybe they're now interested in a different way, which is investing in a mortgage investment corporation. So it's really those people that are looking for a different way of doing things in a self-directed way. That they reach out to us directly. They go through our registered dealer to get approved, get qualified, and then they would have their investment set up through Nest Capital. Good question.
Got it. Yeah. So it sounds like it's mostly word of mouth, like how somebody would necessarily discover a MIC or how to get started with it. And do you have like an onboarding call that you would have with an investor where somebody reaches out to you, let's say, and then you onboard them, give them the options, or what does that process look like?
Yeah, typically checking us out online at nestcapital.ca is a good starting point. We've actually updated the website quite regularly, so we have a good frequently asked questions, a good investor page that puts together all the information in plain language format. And we do encourage investors to reach out should they have additional questions. Then from there, if they want to get started, we bring investors funds in the first 10 days of every month. So we do have an investment round each month. We would put them in contact with our registered dealer, whose role is to get them qualified and approved. And they would do all the necessary paperwork as well. So it's pretty streamlined, but yeah, a good starting point would be to reach out and have your questions answered to get a little bit more familiar with the investment opportunity.
Absolutely. Definitely appreciate that. And yeah, Chris, thank you so much for breaking that down and really comparing and contrasting private lending and investing in a MIC. I think a lot of people see that kind of pathway of being active, maybe flipping, maybe getting into borrowing, or just kind of having some passive income coming in through their real estate portfolio, and kind of shifting away from that active side of flipping or wholesaling or some of those other super active strategies. And from what I've heard from investors as they venture on, private lending seems to be that pathway that a lot of people get into as they want to get more passive. But this sounds like a fantastic alternative that I feel like a lot of people probably aren't that aware of, or that they haven't really done that much research or done that deep of a dive. I definitely hear private lending as that buzzword that comes up a lot, but it's so interesting to hear that comparison between the two, because it is ultimately the same thing, just one is specifically investing in one property and you are essentially either managing that money yourself or have someone to do that in one property, versus the mortgage investment corporation. It's diversified across multiple mortgages. You have somebody who's running all the day-to-day and really going to bat to get you those returns and really making sure that your money is taken care of.
That's absolutely right. Yeah, that's a good comparison. I agree with you.
Awesome. Well, Chris, thanks again for hopping on to the Canadian Real Estate channel here. And where is the best place for people to reach out to you? So you mentioned your website. We'll make sure we link that in the description below. Is there anywhere else people can find you?
Yeah, I mean, we're on LinkedIn, Facebook, but yeah, the website's a good starting point. Check out our details in the description. Feel free to reach out to us at info@nestcapital.ca or by phone at 416-628-2033. And again, Rebecca, pleasure being on today. Thank you.
Absolutely. Awesome, guys. Well, thanks for tuning in to another episode here on the Canadian Real Estate channel. And hopefully we'll see you again on the next one. Make sure if you liked today's video that you give us some love down in the comment section below. Like and subscribe for more, and we'll see you guys soon. Peace.